Hi, this is Joseph. Today I'd like to review an advanced trading technique that I teach in the Learn Forex Trading in 30 Days ebook and video course. This one is called the T2 pattern. So this T2 pattern basically involves identifying a range of consolidation or oftentimes price swings. So as you'll notice here on the Australian dollar, this is the 1 hour chart, and this is the time frame that I actually traded this particular technique, the T2 pattern. I traded it on the 1 hour time frame, but it works just the same on the 4 hour chart, on the daily chart, and I'm going to show you how I used the 4 hour confirmation and then pinpointed my entry so that I could minimize the stop. So here you'll notice that we've got a clear range of consolidation that's set up earlier in the week. Over here was a support low level, and then we had a high. This high here earlier in the week looked like this. Now there was a breakout, but it was a false move. It really didn't have a lot of confirmation, so we didn't take this to the upside. We waited. I'm basically looking to identify significant reversals. Now they're going to happen. The most significant moves are going to most likely occur if you see it on the 4 hour or daily chart, the bigger time frame. So as price was forming a bottom here, right about where this circle is, this is what I was watching on my 1 hour chart, but I was also watching this on the 4 hour chart. I was watching this support level develop, and I was looking at these indicators here. Now when I see price making a new low, I will take a look at the CCI indicator. Now I have to tell you that when I see price making a new low, I still have to go back and identify and ask myself, was there any previous trade that is prior or in place at the moment that I see this new low, which means maybe I shouldn't be buying this pair and expecting a reversal. Maybe it's going to continue. So I'll look at the 4 hour chart and see if there's any patterns that develop there, and I'll show you what I mean in just a moment. But here, everything was lining up for a potential reversal. Well, the T2 pattern is going to show up a lot better on the 4 hour chart. I'll show you that in just a moment. But basically what it involves, and I'll draw this here with the chart with this trend line. This isn't going to be accurate. It's just to show you the price swing. So here we have a low, and then price moves up and makes a high, and then price moves all the way back down here and makes a new relative low compared to the previous low, and then there's indicator divergence when this occurs. Well, again, this could be a move to the downside where the trend is just going to pull back and then hit resistance and then continue. It really is difficult at this moment to say, but if you're aware of what's going on the larger time frames and you're really in tune with what this T2 pattern looks like, you can identify it on the 4 hour chart, and it's a safe trade. It's a beautiful trade to take, and I'll show you what I mean. Now we're going to go to the 4 hour chart. So here, up here, and I'll open up these candles just a little bit so you can see what was going on in here. This is the 4 hour time frame for the Australian dollar. This is the same candle pattern. This is the same low that you saw on the 1 hour chart. So here I'll draw that price swing. So we have that low earlier in the week, and then price moved up to this high, and then after it made that high, price then moved down and made a new relative low compared to this low range in here. So I'll show you the three locations. So here's a low, and then price pulls back up and makes a high, a price swing high, and then price moves down and prints a new low, a new relative low. But at the time that this low here developed, it was printing some severe divergence. If you look at the MACD histogram and the CCI histogram, it was printing some severe divergence even on the 4 hour chart with this last spike low compared to the previous price swing here on the first circle. Now, you also have to be aware of the settings that I use for the CCI indicator on the 1 hour chart, the 30-minute chart, the 4 hour, and the daily charts. They are a little bit different, and they're very specific, because if you have the settings wrong, you're not going to be able to identify the divergence in the CCI. Now, I'm also looking at a few other things that are also giving me additional forms of confirmation as to whether or not this is going to be a reversal. But here, let's just stick with the T2 pattern here. You can even see the T2 pattern on the 4 hour chart. So here on that last spike low, you see some severe CCI divergence and MACD divergence. Let's put the crosshairs right on there, and you'll notice that. Now, all of this is compared to this previous price swing area over here, so you can see a lot of that divergence. That's perfect. And then what I do is I time it here on the 1 hour chart. Let's go back to the 1 hour chart. Here is where I time my entry. Now, there are a couple of different ways that I can trade this. I can trade it off of that Tech 1 candle pattern. Remember, what's the Tech 1 candle pattern? It is a specific candle pattern in itself. So in this case, it was more or less an engulfing candle pattern and also a morning star pattern. But there's also a couple of different ways to look at this, because what if you weren't there when this candle here set up? Let's go right back to that first reversal candle pattern. Let's say that the 4-hour chart didn't finish its 4-hour candle to identify that significant low on the 4-hour chart. Let's say this was the first candle and you're really still not too sure. That's fine. Or let's say that you're asleep. Let's say that you're not at work and you don't have your charts open on this candle. That's fine. There are second entry opportunities that allow you to still profit. And the other trade technique that I teach in the Learn Forex Trading in 30 Days ebook is the continuation breakout trade. Now the continuation breakout trade, it puts me in the path of a big trending move, and whenever I trade the continuation breakout trade on the 1-hour time frame on the Australian dollar pair, I will usually earn about 50 to 60 pips. So let's take this out a little bit further and I'll show you what else I was able to do with some of my other students. What we did at this point was, if they had missed or weren't too comfortable getting in on this reversal pattern here, we wait for the overnight consolidation range. Now I explain what the overnight consolidation range is in the videos, but basically we're looking at the slow period, and there are specific ranges for that to identify that overnight consolidation range, because if you identify an overnight consolidation range that's too tight, it will probably lead to a false breakout and you'll probably get stuck in a whiplash move, which could ultimately lead to a failed trade. I teach you how to avoid doing that. So this overnight consolidation range was fine. What we did then, as a second entry opportunity, if you hesitate in taking the very first bounce off of support, which is fine. Sometimes there are traders, and sometimes I do the same thing, where I need a little bit more confirmation. So here was a second entry opportunity. This candle is the continuation breakout signal candle. Now I explain how to trade this, but basically all of these indicators are confirming this breakout move. So we can take this trade here, but we look at the T2 pattern as confirmation of the bounce. So we know we're going in the right direction. So what we do here is enter in on this continuation signal candle if we don't want to enter back here on this engulfing bullish candle here. Maybe it's just a little too soon for some people. That's fine. And you'll notice how this trade works. It pulls back a little bit but does not stop us out, and it takes off right to these profit targets. This is exactly what we want. And this continuation breakout trade is confirmation of the T2 pattern. Again, what is the T2 pattern? The T2 pattern is really a price swing. The actual entry is on a specific candle pattern. The specific candle patterns are what I call Tech 1 trades. Here is a Tech 1 trade. This is a reversal candle pattern, but it's a engulfing candle pattern. It's a specific candle pattern. Now it could be an evening star, morning star, bullish or bearish engulfing candle pattern. And then here was another form of confirmation. Here was the continuation breakout trade, which involves one candle that closes above or below support and resistance with indicator confirmation. This trade worked out perfectly, and if we go back to that 4-hour time frame, you'll see just how it developed. So that's the T2 pattern. The T2 pattern can be used to identify really big, strong potential moves and reversals on the larger time frames, which means if you can time your entry correctly on the 1-hour chart, the way we did with that continuation breakout trade here on the 1-hour chart, we could potentially take this trade much further than we normally do on a continuation breakout trade, because we see the T2 pattern on the 4-hour or the daily chart. Now, if you'd like to start using these techniques this week, starting tomorrow, sign up today and we can start trading together tomorrow. Thanks for watching.